Next year's budget promises no tax on income up to 12 lakh. Now, this manna from heaven has left some people wondering, would this mean the government will have that much less money to spend? Welcome to a new edition of Confusion Clarified. And let's make it pretty clear on the very confident calculations on which the Modi government went ahead with its so-called gamble of tax cuts. First, the numbers. The cut in taxes up to an income of 12.75 lakh rupees means nearly 9 out of the 10 present taxpayers won't have to pay taxes in the 2026 assessment year. To make it clear, about 7.5 crore Indians filed tax returns in 2024, but that does not mean all of them paid taxes. Nearly 6 crore of them just filed but had salaries less than 7 lakh, which was a cutoff for income tax exemption earlier, which has now been raised to 12 lakh. So these 6 crore people did not pay any tax. They just filed the returns. This means only about 1.5 crore people were paying tax. Now, with the new tax exemption limit, the number is estimated to go up to about 7 crore or even more. Remember, there are always new payees joining the club, Gen Zs joining the workforce, salaries going up, but mostly more people being covered under the income tax net, which has increasingly become bigger with better digital payment infra and even automated and AI-based methodologies to spot tax evasion. Now, the finance minister herself has told Parliament that the government would forego a direct income of 1 lakh crore rupees and an indirect income of some 2,000 odd crore. This led many to worry whether the government will have less money to spend on all its projects. Some business leaders openly voiced concern whether this means less capital spending on government infra projects, constructing roads and ports and the like. Crucial activity that had popped up growth in the years following the pandemic. The worry was especially because Sitaraman had made her intent clear even in the last budget that the government will stick to cutting down the budget deficit that had ballooned to nearly 10% of the GDP during the global emergency that was COVID, and bring it down to a manageable 4.4% by next year. Adding to that worry, the fact that income tax now was a bigger earner than corporate taxes, which, if you remember, was cut down drastically back in 2019. Does this mean less government spending? Well, there is no need to worry because the government is not exactly putting all its eggs in the one basket of taxes and interests from people spending all the extra money they will end up with. First and foremost is the fact that GST collections, which have been on the up and up, will scale new highs in the coming months, and that is comforting enough. But that's not all. The government earns a lot of money from dividends, fines, profits, even from stuff like telecom spectrum allocation, auctioning of coal, etc. Prime amongst them, the dividend from Reserve Bank of India and public sector banks that could top 2.56 lakh crore, and that's a conservative estimate, mind you. This largesse from the central bank, think of it like a bonus you get when you least expect it, has helped the government shore up its own ballooning expenditure in recent years, as well as help it plan provisions like this particular tax relief. Now, dividends from RBI could actually go up in the revised estimate this year, considering that the RBI may just earn a lot more in the coming months with the rupee value going down. That means the RBI sells dollars in the market to stabilize the rupee, then it actually earns a lot more on the value of that rupee. And with forex reserves of around $650 billion in its kitty, there's a lot there to be floated around if needed. Additionally, when the RBI sells dollars, it creates a shortage in rupee in the market, which means Indian banks will lend and more from the RBI, generating additional interest income. A large part of what RBI earns is transferred to the government in the next financial year in the form of dividends. There's another big source, public sector units and their profits. Just listed PSUs alone made more than 5 lakh crore rupees in profit last year. With the government being the majority stakeholder in all of them, no prices in guessing how much the government can tap this source. There is also disinvestment, even if the present government seems to be fighting shy of it right now due to political reasons. But the larger picture is that there's loads of money going around that will end up in the government's kitty, even if it foregoes this 1 lakh crore rupee from cutting income tax. What is 1 lakh anyway when you're talking of a budget of 50 lakh crore rupees plus? Especially if this cut will spur spending and growth and fuel the GDP to grow even further in the coming years. Note that this expenditure of 50 lakh crore plus for the coming year is actually 7.4% higher than the revised estimate for the present ongoing financial year 2024-25. And income from tax, and not including borrowings, is also supposed to be 11% higher than the present year's income in the next financial year. If you salaried guys thought this was Jingalala time, just realize this. It is an even bigger Jingalala time for Modi, Sitaraman and the entire government.